Big news this week out of the real estate industry in the US of A as a blockbuster settlement between the NAR and home sellers when it comes to real estate commissions has just been agreed to. Now, we're going to discuss that and also how it may affect home prices and if and when that same ruling may come to Canada. Also, inflation came in this week and printed lower than expected. We're going to dissect what happened there. And then yet again, we have seen another developer go insolvent here in Vancouver, which we will discuss also. This is going to be a very insightful episode that we are excited to share with you. And just before we get into all of that, if you're considering selling your property or maybe an investment property in this, what is now an uprising price inflationary environment, well, we've created an in-depth guide to tell you and show you how to prepare your home to sell for the highest price possible.
You get one chance to sell your home. And by doing a few fundamental improvements to your property, you can sell for top dollar, providing you the most amount of money for your next home, or even better, a new home and some money on the side for the other important things in life.
So to get your copy of that guide, just go to thevancouverlife.com/top dollar and get your free copy. Now let's dive into all of the exciting things that happened this week in real estate, starting off with the inflation print, which surprised many to the downside. Inflation printed 2.8%, and that of course is down from the 2.9% we saw in January, though that was well below the expectations, which came in at 3.1%. A bit of a breakdown here. Well, groceries were up just 2.4% from this time last year. That is the smallest increase that the grocery segment of the CPI basket has seen dating back to July of 2021. Mortgage interest costs have actually started to turn over as well. So mortgage interest costs and their contribution to the CPI basket, they peaked, at least in this cycle, around Q4 of 2023. And have started to trend downwards. Now, yes, this is largely based on, of course, base effects, but also some rates have come down as bond yields have somewhat come down off of their peaks as well. We do expect, of course, that segment of the CPI basket, the mortgage interest section, to fall further in the upcoming months as the base effects take further effect coming off of their recent highs. Gasoline prices, while almost the same as 2023, well, they saw a notable jump last month of 4%. This is, of course, based on the OPEC group of oil exporting countries announcing that they would extend their voluntary supply cuts during the April to June part of 2024. A movement to prop up crude prices, as they do, supply and demand. Interesting. If you pull back on supply, the price goes up. Where have we heard that before? Conversations, though, quickly turn to, of course, what might happen with potential rate cuts with the Bank of Canada, because they are eyeing back-to-back inflation prints that lowered. Okay, good thing. Remember, we were at 3.4% inflation just 2 announcements ago and are now sitting at 2.8%. Now, essentially, the tight monetary policy that we've been seeing is working its way through the system and the economy, which is starting to show in these inflation prints. So, the BOC, to cut or not to cut. As always, there is evidence to support either arguments or both arguments, right? There's reasons why it could stay the same, go up or cut. But as of right now, April 10th is the next interest rate decision from the Bank of Canada, and most of the markets are pricing in no cuts right now, expected to stay the same in April. Though, as of today, with that new inflation print too, markets did increase their expectations of a June cut, now somewhere around the 75% chance of seeing a cut at the next announcement on April 10th.
Very interesting. So I want to touch now on a local story here provided by the Vancouver Sun of another developer getting sideswiped by huge interest costs. And though there's a bit more to this story as we begin to uncover it. However, the Supreme Court recently issued an order stating that a developer in Vancouver owes $37 million with interest adding $16,555 per day. The developer was aiming to build a 22-story building with 120 condos and a 6-story low-rise with 51 affordable housing units. The site is at 1485 Davie Street near English Bay, and it's home to more or less a fairly rundown 4-story rental building. The developer is Align Properties, They're a Vancouver-based company known as, or previously known, sorry, as Vivagrand Development Corp. And when you trace Vivagrand Development Corp, they're part of the Xiangli Group out of Guangzhou, China, which is interesting because when you look back into 2016, they bought the site for $36.5 million and submitted a development application to the city. With that being said, Avis and Young has just listed the site now for $41.65 million. And this isn't the first time this developer has been in trouble. Actually, they're currently redeveloping a 28-story tower on Robson Street with 177 residential units. And lenders turned to the courts after not receiving loan payments on that site, where more than $41 million was owed. What's worse is in 2017, Vivagrand suddenly canceled a pre-sale project in the Canby corridor. They sold that site mid-development, leaving over 70 buyers who had locked into contracts for 2 years with a little bit more than just their deposits at a time when land prices and condo prices had been surging. This was prior to the pandemic here. So while it appears to be a case, specifically on this site, troubled by surging interest rates, it's definitely a story of buyer beware, which is kind of an interesting maybe segue into our next piece, which is the NAR settlement about buyers' commissions.
For sure. And I think just a couple points I'd like to maybe add or even question about your segment there, Ryan, is, again, we've heard more in the past 6 to 12 months here about developers and buildings going insolvent than we've probably heard in the 10 years prior. And this is mostly just focused on Canada. So yes, we don't know the full story here and how much of the, let's say, management was an issue here, but understandably, quite simply, we're seeing the higher interest rates being a very tough environment for developers to carry these increasing carrying costs. And so more and more of them are going insolvent, they're late on their payments, etc. And ultimately, what does this do? I mean, we know that there's more people coming into the country, into the city, and yet more and more of these stories are surfacing about developers not being able to bring their product to market for various reasons, although again, largely higher interest rates. So it's not creating a very favorable landscape in the future regarding housing starts, more building permits, etc. So we will keep an eye on that and hopefully not share too many more of these stories, but that is the reality of what is happening to developers today. It's a very, very difficult landscape.
It is, and we need these developers to survive so that they can build the housing that we so desperately need. So, having them go under is not favorable. This is not good news for anyone, renters included, FYI.
Of course, yeah. If you're not building 51 new rental units, then they just don't exist. So
yeah, and
let's shift now into the big NAR announcement that just happened in the States here. So in America, there was a landmark settlement that has been reached between the NAR, which stands for the National Association of Realtors, which represents about 1 million realtors in the States, and home sellers that argued essentially that NAR had been artificially inflating real estate commissions. NAR has agreed to pay out $418 million US to end the legal claims that have been going on for over 2 years. They're denying any wrongdoing, and they are essentially just shutting down the negotiations here with a buyout. Part of this, though, the agreement here is that NAR has also agreed to eliminate the standard 6% commission that is paid in the States. Do note that this settlement is subject to court approval. But hey, we want to approach this a couple of ways. First, let's examine the claim itself and the potential outcomes and industry changes if it is approved. So the claim suggests that NAR inflated commissions and that consumers, essentially, they lacked the choice, like it was a monopoly. So in the States, as mentioned, typical commissions are typically between 5 and 6%. Yes, that is about double what people pay here in British Columbia, but we'll circle back to that in a moment. The 5-6% rate has been in place for about 40 years in the States. And I believe that maybe people are starting to take issue with this as the commission rate did not change as home prices rose. Right? If you're paying 6% on a $200,000 home, it's a bit different than paying 6% on a $2 million home, for example. As a total side note, but yet it is relevant, let's look at the property transfer tax here in Vancouver or in the province of BC. Property transfer tax was originally created as a luxury tax and affected homes that cost over $200,000. But what happened is that as home prices increased, that threshold did not increase with it. It's still at $200,000. And since then, of course, they have dramatically increased the amount of property transfer tax payments that are paid. Don't see anybody suing the government for that, but hey, let's just put that in the back burner for now. Back to the NAR settlement here. Regardless, so while 5 to 6% in the States is typically standard, home sellers, well, they have always had choice, right? A, they could try to negotiate that commission with their agent. 2, they could simply go to a discount brokerage, which has existed for over 30 years. There's a bunch of them to choose from. Or number 3, they could go and sell the home themselves and also not pay that commission. So there's, in the States, like in Canada, there is no law that you have to sell your home with a realtor, and you don't have to buy with a realtor, right? There's no law about what commission you have to pay. Given that home sellers have had choice for many years and still do today, the lawsuit itself can seem a little bit misguided, but it is America, and any lawyer will happily take on a suit if you're looking to sue someone. Anyway, this ruling also states that sellers can no longer post commission offered to the buyer's agent for bringing a buyer on the MLS, right? If you're a realtor in the States or in Canada, you can look at a listing on the MLS and it will show you how much the seller is offering as a commission for you, the buyer's agent, to bring a buyer to that property. Typically, it's right around half of the total amount that's offered as a whole. So in the States, if they offer 6%, you typically see 3% go to the buyer's agent, 3% go to the seller's agent. So sure, they can't post it on the MLS, but guess what? They can post it anywhere else. They could post it to social media. They could post it to their own website. They could post it via a text chat group, whatever the case may be. It's just not allowed on the MLS. But this, of course, is opening up the debate of should the seller be responsible for paying a buyer's agent? And we're going to get more into that very shortly here. The ruling also enacts that buyers must enter into a written agreement with a buyer's agent. See, right now, it's just an option. If you go and you want to go buy a home and you, quote unquote, hire a realtor to work with you, it's up to the agent if they want to have you sign an exclusive partnership or agreement with them or not. The tradition, or what's common here in Vancouver, is that you don't. Some do, but I'd say most don't. And that's the same in the States. But this is basically saying, okay, now that you're working with the buyer's agent, you must sign an agreement with them. Good or bad, arguments to both sides, whatever. Now, if court approved, these new rules and this payment will come into effect in June of this year, this summer. And what's more is that this ruling is looking to potentially happen in Canada as well, as there is currently a national class action lawsuit making its way through the Canadian courts that essentially claims the same thing. So let's get into what this all means and how it might affect home sellers, how it'll affect home buyers, how it'll affect realtors, and of course, if it'll have any effect on home prices.
There's a lot to this, and it's a very complicated settlement. And I think one of the things to take a close look at here is what the class action lawsuit was actually calling for, and how they're going after service providers for roughly 1 to 6% of the services that they provide. But the level of hypocrisy taking place in just the settlement is quite high. When you consider that it's a $408 million lawsuit, and the lawyers representing the plaintiffs on this side here have billed $69 million as their fee on just the first $208 million of the plaintiff's settlement. And these lawyers are going to get paid before any settlement dollars actually reach the plaintiffs. The lead lawyer and his partner are earning a combined $17 million in direct fees, and their office is collecting the balance. And again, we'll continue to see if this lawsuit gets bigger and more cases come to, at which point we'll see more and more compensation for lawyers taking part in this. I mean, the lawyers here are getting compensated to what equals about 33% of the claim. So while a buyer's fee at 3% seems high, this is insanity at 33%. And the lawyers actually, I mean, when you go to a lawyer, typically they charge by the hour. But one of the reasons the lawyers charged a percentage on this particular settlement was so that plaintiffs didn't have to pay out of pocket for representation. The very same thing that they're now getting home buyers to do in that segment of the marketplace, which is pay out of pocket up front for any kind of representation. One of the main reasons that buyer's agent commissions were paid for by the seller was because banks would not finance a buyer's agent commission on a purchase price. It has to be paid out of pocket. So they were typically paid out of the proceeds of the sale. In markets where incomes are high, buyers are able to afford to pay their buyer's agent, or they will attempt to negotiate their buyer's agent's fee into an offer and have the seller pay that. Though in markets where incomes are lower, I suspect we'll see a number of first-time home buyers attempt to enter the market without representation under the pretense of saving some money. But this will undoubtedly increase the risk of liability, not only to buyers, but also to sellers. I mean, there's a lot of questions here, but some of the theoretical situations here. What happens to buyers who are trying to buy a home for the first time and really have no idea how the process works or where to start? And they're interested in saving money, but they can't. Right now, they don't have to pay a buyer's agent's fee that is compensated by an offering from the seller. So consumer protection was much higher before this lawsuit. What about buyers who are relocating for work and they don't know the areas that they're buying into? Or what about when markets heat up to intense levels, as we know here in Vancouver, and by the time they see a home on Zillow or REW or Realtor.ca, that home may have sold, may have already gone, or it's sold off market between a network of realtors. What about buyers who can't afford to pay for representation? How are they now going to be protected? Could this not create an unfair advantage for those who can afford buyer's representation versus those who can't? One of the big arguments for the lawsuit was that this would also lower prices, that this would bring down prices because commissions were baked into the selling price. That won't happen at all. What's going to happen is any kind of difference is going to be kept by the sellers, because it's not commissions that prop up the price of assets. We know this through fundamental economics. It's supply and demand, along with market liquidity, like interest rates or quantitative easing, that creates an environment where asset prices will go up or down. It's got a lot less to do with buyer commissions or representation. So the whole argument that it's going to lower home prices is completely false. We know that liquidity and supply and demand are the things that move any asset in any market.
Yeah, some great points there. And I was just running some back of the napkin numbers here I wanted to share with you based on the legal fees going against that settlement amount. So essentially, if this is confirmed, they go ahead, they're going to net out about $275 million worth of payouts to the homeowners involved in this. The settlement's been going on for a couple of years. I don't actually know how many home sales are involved in this, but let's go with 1 year of sales in the States. Just use a quick round number. Last year in America, there was 4 million odd homes that sold. If the average home price in America is $417,000 US dollars now, and half of the commission, 3%, is about $12K, we divide that down to the 4 million people divided by the 275 million, the payout per home sale will be $68. But the lawyers get 137 million too. But again, I understand it's not about the payout. It's more about the precedent that's being set here. So let's go down that path. Let's see how this works. Okay, so we're gonna have a bit of conjecture here. Think that yes, it's been settled. There's no set commissions now, and sellers don't pay buyers' commission. So let's approach this first from the sellers. Okay, so if a seller decides not to offer a buyer's agent commission, will they lower, like Ryan alluded, the price of the home by 3%? Well, I think it's pretty obvious. Let's look at what FSBOs do, right? A FSBO is a for sale by owner situation. And if a homeowner looked and saw their neighbor sell for $1 million and they paid out 60 grand in commissions, and they're like, well, you know what? I'm going to sell for $1 million, but I'm going to keep that 60. They absolutely do not lower their home price to $940,000 because they're feeling like that money should be given to the buyer, right? I mean, it's kind of obvious. I think it's funny when you see these interviews with representatives, in the industry saying that, oh yeah, this will definitely help lower prices. I think that statement alone speaks to the opposite, but open to your opinion as well. I think too, an experienced or more, let's say, real estate educated seller will recognize that if they do not offer a buyer commission, but let's say their neighbor who is for sale as well, and they are offering a commission, What's the likelihood of the neighbor selling first? Well, we see that all the time today. Okay. Like discount brokerages, like I mentioned earlier, have been around for 30 plus years. They exist today. And I can tell you, as someone in this industry, that when most realtors see a lowered commission offered on a property compared to the one beside it, they may just steer clients away from it for whatever reason. Okay. I'm not making any claims here. I just know some things in the industry. And you can understand it, right? If you looked at Apple A or Apple B and, Apple B offered you a better income, most people tend to lean that way. It's human nature, and take that for what it's worth.
Also, Dan, if I could just jump in there, even if there's a situation where a discount brokerage is offering only 0.5% or a nominal fee or something to that effect, most top tier agents, most people who do this full time, who's the only way that they earn income, will often negotiate their fee as part of their offer, right? So even if the market or even if the seller wants to offer that, and you're the only buyer who shows up to buy that home, and you have a buyer's fee that's been negotiated to be paid for by the seller as part of the deal, again, something we see all the time with discount brokerages, that seller is back at square one, right where they were before. So, it's one thing to look at it from a perspective of, well, they're only offering 0.5%. It's another thing for that, buyer's agent who is savvy, who knows how the market works, who will work, commission back into for their own representation, because they've been working for hours and hours and hours and hours with these buyers to try and find them a home. At least that's the experience that I've had with it too.
Yeah, for sure. And we also see, the data shows us, right? People who typically work or sell with a discount brokerage will see their property sit on the market longer and sell for a lower price than the market average. Why is that? Well, of course, the listing agent is typically not taking money out of their own pocket, but offering less to the buyer's side. So they're not going to spend money on the marketing and promotion, etc. And again, the data shows this. What about the other side of the story, though? On the other side, for sellers, instead of offering less money, we often see sellers offer more. Seller or buying agent bonuses exist in almost every single marketplace, and absolutely in a flat or slow marketplace. So sellers recognize the more enticing your offer is to the marketplace, the higher the likelihood of a sale. And yes, that can happen in any situation, whether you're offering a buyer's lowered commission or not. But you get the idea here, right? There's both sides of it. Some people say, hey, I'm going to offer as little as possible. And other sellers say, I'm going to offer as most as possible. And the outcomes typically lean each way as well. And here's something else that I don't know if it's really been considered. If you are a seller and you're going to say, okay, great, I'm going to sell and I'm going to pay my listing agent their fee, but I'm not paying a buyer's agent their fee. Okay, great. And let's say you get that successful sale. Awesome. Well, guess what? Now you're moving. Now you're going to buy a house. And guess what? Now you have to find a buyer's agent and pay the buyer's agent to buy that home. So you're netting out the exact same expenses. There's no money saved here, right? You're just doing one trade-off from another. Instead of giving it to a buyer's agent for your home, you're giving it to the buyer's agent for your new home. The money is still outflowing the same way. I think too, we have to explore what happens if it's ruling for developers, right? Right now, developers are the sellers. They own and create their own product. Would they still offer a buyer's fee to the marketplace, or would they not? Let's be honest here. When a developer goes to market, they need to hit their construction financing targets, which typically means around 60 to 65% of that building needs to pre-sell in order for them to achieve financing. Trust me, they're going to do whatever they can to hit those numbers. And sure, could they just lower the price of the unit? Yes, but isn't that not just the same as keeping the price and paying the agent? Ultimately, the money's going to stay in the same place. It's just a matter of how it's presented, right? It's again, supply and demand. If they have a fantastic product in a red hot market, could they get away with 0% buyer's agent fee? Sure, maybe. But what happens in that slow or down market when they really need agents? Are they going to offer the same 0%? Or is it going to be like some of these properties we see right now that are literally offering a 6% buyer's agent fee in Vancouver? It's unheard of, but there it is. It's real because they need to sell those. That's a little bit of how the sellers are I think, going to look at this. Ryan, anything to add there?
Yeah, no, not particularly. Only that, especially when it comes to developers, I think, you're speaking intelligently to the marketplace, right? Like, this is a free market enterprise. Commissions, like we talked about, have always been negotiable. We negotiate on them all the time. And so, this seems like a massive settlement that's going to disrupt the industry in a really big way, when people don't realize that it's always been negotiated. And that this is only going to be posted in places where the MLS is active. If you look around in the States, for example, there's a number of places where certain regions are not attached to the MLS, like New York City, for example. It's not part of the MLS, not part of the National Association of Realtors either. So how is it going to affect that marketplace? And the simple answer is that this is a free market enterprise, which is what it's always been. And you, as a consumer, have the right to negotiate those fees. That hasn't changed. That's always been the case. I think we'll start to see realtors who were maybe participating in the marketplace because they thought it was easy money. That'll change. But for the professionals in the space, I don't know if we'll see a huge change here, but we'll see.
Okay, so let's shift now and talk about what happens on the buyer side, both for actual buyers and for buyer's agents. Okay, and in this scenario, of course, there is no buyer's agent fee offered from the seller side. So I guess we're looking at it as either a commission or maybe even just a blanket fee for service. Okay, like, let's be honest here. There's been scenarios, probably many times, where an agent basically just gets a phone call and says, hey, I just went through this open house, or I just saw this property. Can you write the offer? And they get the home then and there. That agent put in an hour's work, and maybe they got $20,000, $30,000, $40,000, $50,000 for that. Can that be looked at as maybe a bit egregious? By some, for sure, of course. But if you take that stance, I think you have to be equally open to the scenarios where sometimes you will work for years with clients. You can put in a dozen offers in a hot market, lose every time, and the buyer gets frustrated and ends up renting. Is there a fee for that? Or even if they do get it, is there a fee because of the time you put in? Like, how do you kind of gauge that? Either way, there's all sorts of scenarios that could be, hashed out here, right? We don't know how what's going to ultimately push through the industry here. I think Ryan touched on an important one early on too, as well, is the added cost potentially to buyers. So especially if you're a first-time home buyer, we know how hard it is to already get into the marketplace in Vancouver. Imagine adding on top of that now a buyer's agent fee. Maybe it's 10 grand, maybe it's 15 grand, and quite likely that's going to be cash. You won't be able to finance that. We don't know yet. The ink hasn't dried and the lawsuit hasn't come to Canada yet, but you get the idea here, right? Like, the what ifs typically end up hurting the people who are having the hardest time getting into the marketplace to begin with. And let's say buyer's agents are now offering a range of fees. Low end, maybe it's $1,000. High end, maybe it's 20,000. Whatever. Work with me on this. And so somebody says, "Oh, I want to save money. I'm going to buy my first home, so I'm going to save money. I'm going to only pay $1,000 to that lower price buyer's agent, and they're going to write that contract and get me in." Well, you know what that buyer's agent didn't do was a high level of service. Maybe they didn't read the strata docs or give any appropriate guidance that way. And the first time home buyer moves into a condo, and 3 months in, they get hit with a $30,000 levy just because the buyer's agent was getting paid so little. It's, a scenario of you get what you pay for sometimes. Obviously, these are all hypotheticals and it can go both ways, but you get the idea here. It really opens up some potential issues on both sides. I agree. I think this is a case where the cream will rise to the top, and I think better service is deserving of better funds, and that can be argued ad nauseum. But ultimately, these type of scenarios may all end up widening our wealth inequality gap even further. Okay, those who pay less will get worse service. And when it comes to the largest asset of your life, is that really where people want to cheap out on? Maybe not. It's worth thinking of. Ryan, do you want to add to the buyer side?
Yeah, I think when it comes to buyers, like, it's important to remember good service, really good advice is expensive. And really bad advice or really poor service can cost you an absolute fortune. So it's really important to understand how this works. We've seen it, I think buyers in particular here are getting less consumer protection from the industry and from this ruling, which is going to affect the people who need it the most, which is almost always the case with these things. We see people at the bottom who are trying to make, trying to build wealth for themselves. and they're going to try and save wherever they can. Logically, they would. But at the same time, if you buy a house that's right behind a tower that's going up 35 stories, that'll affect the future value of not only your home, but how you live in the area, the kind of development, the kind of neighborhood that you live in. But as a buyer, if you're not savvy to these things, or you're not aware of these things, or you don't know where to look for them, and you make a poor purchase, that will cost you a fortune in the long run, as opposed to potentially paying for a buyer's agent, for representation, to get really good advice so that you make the right investment choices. Like you said, Dan, this is a huge investment, especially here in Vancouver, where it can take you 30, 40 years to pay off this investment. You may want to make sure that you're doing the right thing and getting the right advice up front, as opposed to finding out afterwards that you made a horrible decision.
I can share that, I've made a lot of stock trades myself in my day, the equivalent of a FSBO. And most of those did not do very well. That's the reality. And now I pay an investment house. And yes, they charge me a premium. And yes, they're professionals. And yes, I have resulted in having a lot more money and a lot better trades with them because I trusted their advice. So I think there's a decent example too of how paying for professional advice can really help you in the bigger picture here. But let's talk about price, okay? And yes, I'm a realtor, and yes, I've got my biases, but when it comes to these episodes, I really try to lean on the data as much as possible for my arguments, if you will. And I'm going to do the same here for price. So some are believing that, hey, if you take out the buyer side commission from one side of the transaction, but it stays within the transaction, just on the other side now, that home prices are going to drop. And I think, again, looking back at the for sale by owner example I said earlier is a perfect example of that. And no, it will not. My neighbor sold for $1 million. I'm selling for $1 million just with no realtor fees. I am not dropping my price 6% for a feel good for the landscape type of scenario here. It doesn't exist. And let's look at commissions and what they've done. Okay. 5 to 6% is the norm in the States. Okay. And that's true for Washington, as it is for New York, for example, as it is for Alabama. Okay. Alabama or Detroit, for that example, have some of the lowest house prices in the nation with the highest commissions. Okay. Now let's jump to British Columbia. Let's go to Vancouver. Vancouver has the lowest realtor commissions in North America and the highest prices. Okay. So obviously commissions don't really affect home prices to that degree. If that were the case, everyone here would be rooting for 10% realtor commissions so that prices would go down to match the rest of North America here. It just doesn't affect it to the degree that some people wish it would. And let's think about this as well. Right now, when it comes to closing a deal, there will be times when the buyers and sellers are close, but they're completely dug in, maybe 10 grand apart. Maybe this is a $2 million deal and you've been negotiating for 3 days, a week, whatever the case may be. There's absolutely no question that there is no bringing the buyer up and there's no bringing the seller down. And so the realtors just pick up the phone and say, you know what, I'll kick in 5K if you kick in 5K just to get this deal done. Right? Because they're going to make a bunch more if the deal actually closes than if it doesn't. And there you go. But guess what stays the same? The home price, right? So again, all of these, so there's a lower commission scenario where the home price stayed the same once again. And so now the next person who wants to sell or buy within that same condo, for example, it was a condo, that's the new, and that's the most recent comparable, is that price, right? It doesn't show that the realtors gave in a little bit. It shows that the home price sold for X. So to me, those are, 3 examples in our modern day real estate environment that says, look, absolutely no discount in real estate commissions is going to dramatically affect home prices.
Well, and the same is true in any other capital market. I mean, let's look at, say, an Amazon stock, for example. If you went to your investment house and you said, hey, I want to buy Amazon stock, you using a professional to buy the Amazon stock isn't going to lower the price of Amazon or raise the price of Amazon stock. It's arbitrary. What you're asking for is not linked to the asset price itself. You're paying a percentage based on the purchase, but you're not paying that purchase. The amount that you're paying is set by the market. It's not set by the fees associated to the sale of that asset. So, whether it's buying a house, whether it's buying a stock, whether it's buying a business broker or a stock broker or, a real estate broker, these people put deals together. And to arbitrarily say that the commissions are going to affect the overall prices of real estate is false, in my opinion. And I think it's a bit of a false pretense in terms of saying that it's going to be easier for people to get into the market now, that it's going to be cheaper for them to access it, when in all honesty, it could be even more expensive.
That's the reality. Yep, totally agree. So let's talk about realtors. And then lastly, we're going to touch on consumers here. But realtors, I mean, already this is a very harsh industry. So much so that realistically, it's obviously only the good ones, the talented ones, the honest ones, the ones with a great level of skills and experience and service and levels of care survive in this industry. It has an 87% failure rate within 5 years. That means only 13 out of 100 agents today will be around in 5 years from now. It's that brutal. So this is just yet another opportunity for the good ones to adapt, evolve, become better, enhance their services, give more care, and basically rise to the top. And I think that ultimately ends up helping the consumer, right? The consumer will always have choice. The consumer should always have transparency. The consumer should always have that level of service and level of care as well. You know, at the end of the day, the industry will always change. There's always new rules. There's always new taxes. There's always new governance, and that's fine. The intent is to always improve. And so this, again, is a look into the industry. And if ultimately it shakes things up, I personally think that's for the better. I think it will allow consumers to have more options, more opportunities, and again, be more educated and realize that they have more options that maybe they didn't know they had otherwise. So ultimately, I will take any change within the industry for the better and run with it, because I think this is a great opportunity for both sides involved.
Yeah, it provides a greater level of transparency within the industry in terms of what you're actually going to pay for your representation. You know, kind of like you talked about earlier, Dan, when you have a buyer's agent who has toured for an hour and finds a property with you and didn't provide a whole lot of skill, a lot of service, or a lot of care. Is that market participant going to remain in the marketplace? And I think the answer is no, because they're going to come up against people who are very talented, but there will be a bit of a crunch in terms of the availability of supply of good realtors as well. So, the market will again then start to set the price for buyer's agent commissions and things like that. So again, it's always been a free market. I don't think that free market element is going to change. I think as a consumer, this should open your eyes to the fact that you've always been able to negotiate your fees for service. You should be doing that now, and you should be doing that into the future, regardless of how this NAR settlement washes out.
Very polarizing subject, I'm sure. Would love to hear your feedback on where you think this can evolve, who's right, who's wrong, whatever it is. We'd love to hear from you. Last thing we want to touch on today is just a quick market update, because as always, it's interesting. And let's do a quick house price temperature check. Because nationally, we're seeing home prices about 14% below that 2022 below off top peak. But do note, underneath that, we've got Alberta, we've got Saskatchewan, and we've got Newfoundland, all experiencing record highs right now. Ontario, on the other hand, is down 18% off of that peak, compared to our province in BC here is only down 8%. But looking again and deeper into the ever resilient greater Vancouver market, we're seeing something kind of fascinating. So HPI, the way that prices are registered here, are down 6.7% last month compared to the all-time high back in 2022. But at the time of recording this, and do remember, we did see a big almost 2% increase just last month. But at the time of recording this, Thursday, March the 21st, median prices in the first 21 days of sales here are currently at an all-time high, $52 higher than that 2022 peak, with average prices we're over $1 million right now for median, and the all-time high previously was $999,999. We're at $1,051,051 as of today. Average prices are increasing as well and are sitting at only 1.5% below the all-time high. So you are unquestionably going to see the HPI price jump again for the month of March when it all washes out, following again that almost 2% increase in February. Point of me saying this is it is absolutely incredible to think that we're basically back to all-time high prices that were achieved in a 0.25 interest rate environment. Rates today are 20 times higher at 5%, and Greater Vancouver home prices are back to those all-time high prices and currently trending upwards. It is as if housing in Vancouver is the unstoppable runaway train, and you're either on it and benefiting from the ride are ultimately being left in the financial dust. This disparity that I'm discussing here was recently displayed in an article by RBC, who noticed that while all that helicopter money was coming from the government, both renters and homeowners were saving on a relatively similar scale. But as soon as that stopped and the quantitative tightening began, the savings diverged. And I'm going to quote this from RBC's release here just the other day. The third quarter of 2023 was the turning point when both homeowners and renters saw declines in net wealth. But renters have undoubtedly been hit the hardest. In addition to experiencing a pullback in pandemic accumulated wealth, in a large part due to a decline in value of financial assets, Canadian renters as a group are once again dissaving or spending more than they earn every quarter. Collectively, renters spent nearly 9% more than they earned in a household disposable income in 2023, while homeowners saved 7% of their take-home pay. That is a huge disparity there. This is further demonstrated by the percent of average household disposable income devoted to housing-related spending and utilities. Owners are currently at 21% nationally, whereas renters are at 29%. So homeowners are spending less of their income on housing compared to renters. It's facts like this that make some renters want to become homeowners even more, understandably. Yet, even that influx of new buyers reduces the amount of homes available and further exacerbates the housing crisis, especially when we have developers going bankrupt now. The risk of greater inequality between renters and homeowners is one of the many reasons why Canada must address this housing crisis. That's the article. And yeah, we see it every day. We hear and we feel and we see the frustrations of renters all the time. They're at a loss of how the heck do you get into this market, because they see that runaway train and they don't like being left behind, and nor do they deserve it. It is such a difficult problem to face. And I don't know who has the answers here, Ryan.
Well, certainly not any kind of government in the last sort of 20 years. They haven't proven to be able to find a path forward where people can get ahead. And largely that, I believe, has to do with the amount of taxation that takes place in this country. For people who want to do better, they pay more and more and more and more and more. And people who are at the bottom of that rung, they tend to get screwed the most, because as assets, financial assets, whether they're homes, stocks, investments, whatever they are, as they continue to rise and become further and further out of reach, the ability to generate wealth, the ability to get ahead in life gets harder and harder, especially when it's compounded by an unfair tax system. And when those taxes don't typically come back to helping homeowners get involved in the investments that would get them ahead. So, I really think it's a lot of political reform is to do with this, and it's much broader than maybe just looking at interest rates. I mean, we have to look at infrastructure, we have to look at immigration and population and all of those combined things. And I think as consumers, we maybe need to stop looking at the immediate fix and start spending more attention on what's going to be a long-term plan that's going to get everybody ideally invested in some way, shape, or form. I mean, when you look down in the States, for example, I think it's roughly half their entire population isn't invested in anything. They're just working for wages. And it's clearly asset prices. When you compare asset prices to wage growth, you have to be invested in an asset, whether it's a real estate one or not, to stay ahead so that you can continue to build wealth for yourself. So again, it's a complicated issue, but if we keep focusing on the quick fix and we don't focus on the things that are going to take some time to rebuild and make this country a place where people can come and get ahead, then this wealth gap, this inequality gap that we're facing is only going to get worse.
Lots going on, lots of pressing issues. We always appreciate you tuning in and would love to hear your feedback on the ever fast moving real estate industry, north and south of the border, and of course, what it means to you. Thanks as always for tuning in, and we look forward to seeing you here again next week.